Welcome to another stage analysis video. It is Wednesday, the 8th of March, 2023. I'm going to go through some of the major indexes to start tonight before getting on to some short-term market breadth indicators, and then look at some of the last few days watchlist posts and particularly the group themes coming out of those posts. As semiconductors in particular has been a major theme. So I'm going to discuss the stocks starting to look interesting in the group again. There we've had about 20% of the group actually come up in the watchlist scans over the course of the last week, so certainly a large amount of movement in the group and interesting positionally in terms of in what we call the stage 2 backup zone. So have a look at that in a bit more detail in a little bit. So starting tonight, as I said, going into the S&P 500 first, starting to pull back over the last few days, consolidated today around the 50-day moving average, sitting underneath that 21-day moving average still here. So underneath the short and medium-term moving averages at the moment, but still holding above this 200-day moving average. Reversed at the trend line resistance there. So acting very technically at the moment with rebounds at the 200-day moving average, then at trend line resistance. So consolidating still within this broader stage 1 base structure after an initial failed stage 2 attempt, which has turned into an up thrust. So could potentially make a new stage 2 breakout attempt if it regains that 4,100 level, starts to move out through there, potentially would start to move back out into stage 2 again. But at the moment, still consolidating within this broader stage 1 base structure, which it's basically been in since around. The structure's been building since all the way back in May, June time in 2022. So at the moment, on watch to see which way it's going to break, whether we break the near-term pivot here and start to move through this 4,100 level back into potential stage 2, or if it starts breaking back below this 200-day moving average here, and that would be a big warning sign to get out, as we'd then obviously potentially have a very quick move towards the bottom of the range again, so, and potentially start to fall back into stage 4 once more. So at the moment, 30.8% of stocks in the S&P 500 are above their 20-day EMA, still in the lower zone here after a brief move out of it. So in a reasonably good position for a move higher if it does move. There's plenty of room on the upside there, but at the moment still in a fairly neutral / negative position. So as it's in just knocking around the bottom of the lower zone there. Nasdaq Composite, similar kind of structure, obviously been weaker until more recently. The early 2023 move was much stronger than we saw in the S&P 500 here. See relative strength picked up through January into early February, but has flattened out since. They've been pretty neutral since then, fairly in line with each other. So potentially if the Nasdaq can start to break near-term pivot through here, it could start to outperform the S&P 500 again, and start to approach potential stage 2 level once more. But again, in a very neutral position overall at the moment, still hovering above the 200-day moving average here. Same with the Russell 2000, still decent way above this 200-day moving average, consolidating at the 50-day moving average in the major resistance zone, which has been support and resistance multiple times throughout the last year or so. So had this stage 2 breakout attempt, is potentially still holding in this one at the moment, although it's dipped under slightly. So looking for a rebound, continuation move back above the 192 area to start to move back out again into stage 2 more convincingly. But as with the S&P 500 and Nasdaq, etc., we do start to see a dip below the near-term lows here, then potentially we could be on for a deeper test down in the base, and stage 4 continuation could be a potential outcome. But 200-day moving average still support at the moment below. So as long as we remain above that at the moment, it's still in a fairly neutral position, and still looking for a stage 2 attempt really to start to make its way out. Nasdaq percentage of stocks above their 20-day EMA, similar to the S&P 500, we've only got 30% of stocks in the Nasdaq overall, so about 3,500 stocks or so. We've got 30% of those above their 20-day EMA at the moment. So as I said, still in a fairly negative, neutral kind of position. Lots of room to the upside if it does want to move. We want to see a strong, when coming out of the lower zone, the signal is once we start moving up through the key 30% level and up, start to get back through the middle zone particularly. So looking for a strong move back towards the upper middle range. But if it does start to drop further down in here, as we've seen on prior moves, it can linger in the lower zone for a while. So at the moment, still in a fairly dangerous position here. Nasdaq 100, a little bit stronger at 47% at the moment, has come out of the lower zone recently. So near-term buy signal on that one. So that one's on a near-term positive signal at the moment. Obviously consolidating. NYSE more negative, similar to the Nasdaq Composite, down at the lower end of the scale, 34% at the moment, so still a little bit more negative. Small caps more negative in the lower zone as well, and S&P 500, as we talked about before, at 30.8%. So attempting to make a slightly higher low. If we can get a strong move up through that area, back through the middle zone there, then potentially could move back onto a positive signal, but at the moment still on a negative. So generally with the short-term moving breadth, still fairly neutral to negative at the moment. Look at the Nasdaq Composite and NYSE Bullish percent index 1 hour chart. So with this currently hovering around its 30 bar moving average on both, so just dipping below, above and below, consolidating in a sideways range for the last week or so. So fairly neutral behavior at the moment. If it starts to break these near-term lows that formed on the 2nd of March, then we'll turn this back to a negative signal again on what we call a difficult environment. So at the moment, neutral environment for both of those. So depending on which way it breaks here, will determine. Again, same with in the upper zone here, we start to get a break to the upside here. We get a sudden gap through the 58% and the 48% areas here on the Nasdaq Composite. Then that would turn that back towards a positive as well. So which way that breaks will determine, obviously, positioning on that. But again, very neutral at the moment, as with the short-term moving average breadth there. Nasdaq and NYSE Advanced Decline Line Momentum Index using the 10-day moving average, so short-term momentum index. The traditional momentum index uses the 200-day moving average, but for short-term swings, the 10-day moving average is much more useful in terms of actually giving you when it gets to extremes, basically, and starts to move back through the zero line again. So above the zero line is a positive environment, and below is a negative or difficult environment. And once you get to extremes and start to see reversals, it's obviously when it can generate some decent signals. So at the moment, this one just hovering in the lower zone, hasn't dipped as far as it has done previously, so potentially could roll over if it can't manage to push through this zero line here and make a deeper attempt. But at the moment, looking for obviously it to move through the zero line and back into the positive environment, but both still in the lower zone on a more difficult environment signal there. Okay, let's move on to the next part of the video. So in terms of the watch list stocks at the moment, there's been a strong theme, as I said at the start of the video, with the semiconductors recently. I did a group focus around a month ago on it as it started to move out into early stage 2. And at the moment, we're in what we call the backup zone here. So we've had the stage 2 breakout. We've had the first significant pullback towards the rising 10-week moving average there, and it started to rebound again. So we're in the potential secondary entry zone for the group, and obviously many of the stocks are also in similar positions. So it's a broad concept, the backup zone. Stan didn't really give a very good description of how to obviously take the backup entry point. So personally, I prefer to use the Wyckoff method for actually entries in the backup zones. It gives much more detailed instructions on how to enter that kind of area. So at the moment, though, we can see we have broken the stride of the stage 4 downtrend. We had the initial change of behavior as it started to move back into stage 1, made a higher low. We've got the inverse head and shoulders pattern on this, started a sign of strength rally, started to move out into early stage 2, obviously initial pullback, and now looking for this to make a continuation break up to new near-term highs here and start to break through this older resistance zone, which, as you can see, was the top through 2020, a lot of the early part of 2021, and then became support resistance as we moved into 2022, and it started to break down into stage 4 there. So potential, obviously, this is a strong zone of resistance that it's attempting to move through at the moment. So if it can start to move through this more convincingly, then obviously they could be much stronger runs for some of the semiconductors, although obviously some of the leading stocks in the group have already had some very impressive runs. It's been a very strong area since the October lows. See the group ETF itself here has had a fairly decent move with over a 50% move itself. So individual stocks obviously having much more significant moves than that in some cases. If you look at the daily chart, you can see at the moment just above the 21-day moving average here, tightening up over the last few weeks as the market has been pulling back. So showing a bit of relative strength in the near term here. You can see making an RS new high today, while the price action at the moment is still below the highs here. So a bit of a positive divergence there in obviously relative strength compared to the price action. So which is it's good to see. See, this is the inverse head and shoulders pattern at the moment. If we look at this on the ATR chart, so you can see at the moment just sitting underneath the 1 ATR level at the moment, which is at 247.49 today. So it's at 246.35 was the close today. So looking for start to move through that 1 ATR level again, start to test the upper range here.